All right, AMD CEO Lisa Su, looking forward to getting into this one.
We got to find out what the hell went on here. It was a better than expected third quarter, but people are saying...
All right, way to come out of the gates there, Jim.
And we got to find out what the hell went on here. It was a better than expected third quarter, but people are saying that the forecast was light. I question that, but that's okay, because we've got Lisa Su here, who knows a heck of a lot more about the company than I do. Lisa, first of all, welcome. Fantastic. You're great. All right.
Good morning. Good morning. How are you guys?
I am good. Okay, let's get right to it, because people are really, they're concerned. I'm not using the word frightened, because we'll save that for Halloween. At the beginning of the year, you said you'd do $2 billion in AI, and you did $5 billion. Now you do $5 billion. At the beginning of the year, your stock was at 154. Now your stock is at 153. How is it possible that you could be offering $2 billion as your forecast, then do $5 billion, and your stock is unchanged? Would you please explain to me that? You're better at math. You went to Bronx Science.
First of all, it's good to see you guys this morning. Look, we had a very strong third quarter. If you looked at the overall growth, we grew 18% year over year. We had a very strong data center quarter. We had a very strong server quarter. We had a very strong AI quarter. And we actually, as you said, we raised our guidance from $4.5 billion of AI revenue to greater than $5 billion of AI revenue for 2024. So overall, lots of positives. And, look, this is a long-term growth story. You know that. When we think about, the massive demand that there is in the data center for both AI and traditional compute, we are one of the very, very few players that can offer all of the different compute capabilities that are required. So,
Record data center segment revenue up 122% year over year. Client segment revenue of $1.9 billion, up 29% year over year. Gaming segment revenue was horrible, down 69%. Gaming segment is just in a bad spot. My guess is that starts to come back for not only AMD but NVIDIA in 2025. But it's been a brutal year, right? Brutal year in regards to the gaming segment. So now I graded their income statement inside the private group. Basically, in my private stock group, in that particular Discord chat, I have a income statements tab, and I grade just mass amounts of income statements over an earnings season, right? AMD, I think I graded them at, the income statement was, I think, an A. It might even have been an A+. I can't remember, but it was a very high grade. It was either A-, A, or an A+. It was a very good income statement. So, yeah.
That standpoint, I think, we feel very good about where we are. Going into the end of the year, we're going to grow in the fourth quarter at our guidance, 22% year over year. And that's all about, growth in data centers, growth in servers, growth in AI, and also growth in PCs. So those are all positives that we see in the business.
Now,
let's go ahead before we go further here. Let's check out valuation in regards to AMD, which I think should be very, very intriguing here on this one. So Ford P32, right? AMD's got pretty strong growth outside of the gaming segment, right? But actually very strong growth outside of the gaming segment. Some of those numbers are insanely impressive. So 32 doesn't seem crazy at all, right? I mean, look at next year's expected revenue growth. Analysts are at 27%. So they should grow mid-20s to maybe low 30s is my guess for revenue. At a 32 forward PE, that's pretty darn attractive. I mean, because you're talking about revenue that's probably going to grow 6x or 7x, where an average company's at earnings per share, next year EPS growth, analysts are at 129. So you're talking about, 12x, 14x, kind of an average stock out there, if not more than that, at basically a 2x valuation. That's very attractive. Let's play around with some numbers. Let's go to the projections tab here. Let's have some fun here on 1000xstocks.com. I love to have fun on 1000xstocks.com. If you're not having fun on 1000x, where are you having fun? That's my question, okay? So let's say AMD could grow at a 20% clip on average revenue-wise over the coming years, right? So net income, they should be able to outstrip that number significantly, but I mean, 30% is a low number. I would say 40% on average over the coming years, right? And you could probably run the company at a 20 and, well, shoot, then you're going to be able to run it at a 40 and a 60 PE, right? If they're growing at those sorts of rates on average, shoot. Oh my gosh. And this is easy, right? And that gives you a compounding annual growth rate on the low end 26%, high end 39%. So then you say, okay, let's go more timid. Let's go 15% revenue growth on average, right? That might end up being way low because remember, AMD's playing catch up in regards to AI, so their revenue growth should far outstrip, in terms of percentage growth, should far outstrip NVIDIA over the coming years. So then let's say net income, let's take it down to a 25% number, okay? Which still is great, right? But let's take it down to 25% on average over the coming years. So, then let's take this down to like a 30, right? Let's take this down to a 30, and we'll take the top line down to a 50, right? So let's go ahead and take this guy down to a 50, 50, 50, and a 50. So obviously that lowers our compounding annual growth rate down to 4% on the low end and about 19% on the high end, right? But the question is, where are those growth rates at? I think they're going to be significantly higher than where analysts are expecting, right? Let's just run 2025 at kind of what analysts are expecting here, and let's see how that changes numbers. So we'll run 27% there. Analysts are at, 129% EPS growth or something insane like that, right? And then let's say after that, let's say they only do 20% EPS growth on average per year after that, okay? And they still do the 15% revenue. So then you start running a compounded annual growth rate on 18% on the low end, 34% on the high end, right? Which if AMD is consistently growing 15% top line, 20% bottom line, a 30 to 50 P is pretty dang fair for the company. Because you're talking about essentially a company that's growing revenue and earnings per share 2x to 3x in average stock in the market. And if the average stock in the market's trading around a 20 PE, then you should easily be able to command in that 30 to 50 range, right? So the moral of the story is AMD's a buy. AMD's a buy. Yeah, it's a buy. There's no doubt about that, right? Let's go ahead and react to more of this video.
See server incredibly strong. I see you taking incredible share. Thankfully, from another company that at one time I met you when your stock was at 4 and they were at 50. You told me to get out of the 50, go to 4. You're taking share from that company, aren't you?
We are having a very strong CPU cycle, I can say that. We just launched our Zen 5 processors, strongest portfolio, we've had overall. We are firing on all cylinders. When you look at, this traditional server market, we're starting to see refresh cycles actually in both cloud and enterprise, and that's showing through in the overall demand. And, we also have, a very strong portfolio when you look at, the AI market as it relates to PCs. So that's another nice growth vector for us. And we're at the very, very beginning of that cycle as well.
One of the reasons that we own your stock for the Travel Trust and have for some time is we are firm believers that AI is so big that it's not just, that actually has room for 2 players, that it's not just Jensen Huang and then nobody. Could you make the case that actually you are a strong number 2 and getting stronger?
Yeah, absolutely. Look, I am a huge believer in AI. This is really the beginning of, what I like to call it an AI super cycle. We believe AI is going to be in every aspect of computing, whether you're talking about, the large clouds, enterprises, you're talking about the edge, or you're talking about, PC clients. And you need all different sizes of compute for that. And that's exactly what we have. We're at the beginning of the cycle. And, as we said at the top of the program, we started with our MI300, AI GPU, just about, 10 months ago. We announced it in December of last year. We said, hey, we think revenue will be about $2 billion. And we knew that this is at the very beginning, but we've had just incredible partnerships across all of, the cloud, the largest hyperscalers. We made great progress with Meta, with Microsoft, with Oracle, with a number of AI players. And we're going to continue to do that, going forward. So I think AI is really at the beginning, and, our goal is to be a very, very strong overall compute provider into that space, and really partnering with the largest vendors in the industry.
So first, very important here in regards to AMD. Be careful betting against Lisa Su. I remember when she took over this company and, it was, around $2 stock, right? Around $2. It was a $2 chuck. And look where the company is today. It's one of the biggest tech companies in the world. They've been incredible what they've done. It's $150 stock price, whatever. It's magical. So I got to say, she's a beast. One of the top 5 CEOs I've ever seen. One of the top 5 CEOs I've ever seen in my 16 years of being in the stock market. That needs to be said, and it looks like she's going to lead that company for quite some time to go in the future, which I think should give you a lot of comfort as an AMD shareholder or somebody looking at the stock, right? Second, I think the stock's being hit harder because of some other things that are out of their control. One, SMCI stock there's a whole big situation going on in regards to SMCI that I don't feel like going into, but it's not good. In regards to auditing and the legal front with that company. So that stock's crashing. It's sending a lot of these stocks down, and I think that's why AMD is getting hit harder. Secondly, Google, if you look at their CapEx number, it might even have been under what a lot of folks had anticipated, which gives a little bit of worry about AI spend, right? And so therefore, I think that just is something that a little is weighing on the space. And so that's why I think AMD stock's getting hit harder today than it probably deserves to have gotten hit. And I don't even think it deserved to get hit, to be honest. Like if that stock was 170 today, I'd be like, okay, I get it. Like after that earnings, like, I get it. So yeah, oh gosh, I might buy it at some point in time. It's not a stock I would mind buying. It's not a stock I would mind buying at all. That's one of those really great companies that you can hold for years and years to go in the future. I like that one.
Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Tesla doesn't need a low-end vehicle to continue to grow.
23% since the company reported quarterly results last week. Joining us now with more on Tesla, Colin Rush, Oppenheimer senior research analyst. I thought it was somewhat disappointing, some of the stuff that we heard from Tesla. Why did the stock perform so well? I guess it's in the eye of the beholder.
Yeah, there's a couple of things. One, the gross margins on the auto side were better than expected. And it's pretty clear that the company is self-sustaining from a cash flow perspective. And as they continue to grow as an EV maker, and we continue to be very bullish about their EV technology, it extends the runway on their ability to deliver on the autonomy opportunity. And while we have some caution around that autonomous technology, I think folks started giving them a lot more credit for that runway and their ability to deliver on that promise.
Colin, if you were just looking at the prospects for selling cars, selling Teslas around the world for premium prices, I mean, that part of it is it, would that cause you to buy the stock here? I mean, and even some of the profit being so profitable, but a lot of it had to do with that pure profit the company gets from selling those environmental credits to other automakers.
I mean, when we look at it, it was, about a little less than $800 million in credit revenue that they had in the quarter. And so there's a meaningful contribution to their net income from those credits. And that comes from multiple geographies. But at the end of the day, we look at least half, if not more, of the value being ascribed to their AI opportunity, and particularly autonomy as the first application within that AI bucket. And so for us, the EV opportunity is meaningful. They're executing on it well. They continue to drive costs lower and have great products. But the AI, bucket of profit pool that they're trying to dip into here is really what's driving the value in the stock. And we think they're further off from actually being able to deliver on that than what the stock is saying at this point.
So I actually disagree with him. I disagree with him. By the way, it is a gorgeous day here in Vegas. It is absolutely gorgeous. Slight breeze in the air. Oh, it's beautiful. Okay, I disagree with him. I actually don't think there's a huge chunk of AI really priced into the stock at all. I believe a lot of, if you want to look at Tesla's valuation, say it trades at a 50 forward P or 60 or 70, whatever your estimates are, okay? Bottom line is it's significantly above where automakers usually trade, which is around 10 or even under 10, right? I believe a huge component of that is obviously the energy side of the business, which is growing ridiculous, like 50% plus growth rates there, right? I think another huge component is people are looking at it and they're saying this company produces less than 2 million cars a year. They're probably going to get to at least 5 million cars a year, right? I believe they're probably going to get to 10 million cars plus a year long term. But the moral of the story is, if you, between the energy side of the business, and then if you think they're going to increase their selling abilities by 150 to 250% over the next 5-7 years, you have to price in that future, right? That's, I believe, why Tesla trades at a much richer forward P than the other guys. I don't think a lot of it really has to do with self-driving. I think that's all still to come. Because if they nail that, that's a whole different range of valuation there, and we talk about the autonomous taxi network and all that sort of stuff. That's a game to play out. I don't think Tesla's really valued there. It just doesn't make sense. Because everybody, I think, pretty much expects this company to get to a lot bigger vehicle volumes than where they're at, especially as they get more affordable vehicles in the market, right? In the energy business, you have to value that. Their business is growing insane, right? So, and then you have to consider also the margin capabilities with the services opportunity. As the fleet gets bigger and bigger, they have more supercharging revenue, more subscription plans, right? I mean, more things go wrong with the vehicle, so there's more of that opportunity. Like, geez, it's immense. So I don't think this AI stuff, I don't think it's priced in at all. I don't even think it's like 10% of the value of Tesla stock right now.
If it does go, Colin, to, and I think that, we were a little bit surprised maybe that 30 trillion, that someone would even mention that number for what the company could be worth. And then Andrew said, well, why stop at 30, right? I don't know. You figure that's like Austin Powers.
Like a terminal value? I mean,
why talk about trillions when you can talk about billions? But how much, what would that entail? How much would be the car business to get to anywhere, let's say a multiple of what the market cap is right now? How much of that will still be electric cars, and how much of it is going to be everything else that gets under the Tesla umbrella?
We're really looking at the potential for them to grow into, $5 to $6 of earnings by 2027, 2028. And so if you put a multiple on that in the high teens, you can get yourself into the $100, maybe $120 range for the stock. We're looking at the energy storage business at worth $20 to $30. And then the balance of the stock price here is really being driven by the AI potential. And they certainly have a very capable engineering team that's working on these opportunities. But it really comes down to when.
I just disagree. He's missing the mark completely in regards to this. The other thing you have to consider about the EV business, let's just focus on that. Forget robo-taxi, forget the energy side of the business, anything like that. Tesla's margin capabilities in the EV business is going to be far exceeding anything that we've ever been used to. So look at Toyota's margins on selling vehicles. Look at Honda's margins, like the big automakers, right? Tesla's margins are going to dwarf those companies. And why? They don't have to worry about the competition the way the traditional players had to worry about the competition. Traditional auto was insanely competitive. And the reason being is everybody could do that. EV, not everybody can do that. It's Tesla. Tesla's the only guy making money in this game. The other companies haven't focused enough on the tech to get their vehicles up to a scale where they could compete with Tesla. So what you're going to find over the next decade, it's not going to happen overnight, but over the next 10 years, these other auto manufacturers are going to slowly fail one by one by one. They're going to consolidate, they're going to try to group together, but their tech is going to be so inferior to Tesla's. And remember, Tesla keeps the pedal to the metal, so they just keep moving up, right? And so Tesla's margins on when they go to sell a vehicle is so much higher than traditional auto, right? And then you add all the services capability of selling subscription plans for this and that and this and that and all the other new things they're going to have over the next 5-10 years. And you create a margin profile that's far exceeding anybody else. So you got to understand, like, if Toyota goes to sell 10 million cars a year, their margin on that's fairly low. Tesla, when they get to a day when they're going to be able to sell 10 million cars a year, the margins are going to be 2x, maybe 3x what Toyota's margins are. So that's where just the vehicle opportunity here in regards to Tesla is so So immense.
And what the competitive environment looks like. And right now, from a regulatory perspective, they're certainly behind. From a cars on the road perspective, they have more vehicles on the road, but not vehicles that are actually, driving themselves. And so the testing process is going to take a fair amount of time before they can actually start monetizing that in a real way.
What about China, competition from China? How's that going to play out? Does it matter who's elected?
At this point, you look back at history and look at what happened with Japanese automakers, Korean automakers. You really end up having to make vehicles locally in domestic markets. And so the question is, what's the technology underlying that? And we're seeing the OEMs in both Europe and the U.S. make significant investments on driving cost reduction. I think limiting some of the competition. I think the European market is a real example of what may happen, where we see BYD starting to penetrate that market in a little bit bigger way, but starting to actually manufacture in Eastern Europe and Turkey. In the U.S., I think it's going to be hard, in this political environment to really see, Chinese automakers start to penetrate this market. In a timely fashion that would start to take share from some of the existing manufacturers that are already here.
Did you know he was going to say no $25,000, or we're just going to go straight to the?
I think we already understood that at the point that they said we're going to go to the version V2.5 and kind of get halfway there on the existing platform. It just doesn't make sense for them to go to that low end vehicle, especially when you can start monetizing, some of the ADAS functionality at a little bit higher rate. I don't think they really need to drop down to those price levels to continue to grow. And we actually had units growing ahead of our peers on the street here in 25 and 26. And I think they'll continue to grow into that opportunity. They do have better EVs than most of their competitors on the road at this point. Right. And I don't think they need to drop down to that low end to really drive volume into the 3 to 4 million vehicle a year range.
Yeah, they're still going under 30K in my opinion. At the end of the day, they want to go to 10 million plus vehicles a year, right? How do you go to 10 million plus vehicles a year? You get under that $30,000 price point, and that's kind of like the magic number out there. So now, in regards to China, I think he's played his cards pretty good, because he's obviously played the Trump card, right? But he's also played. You got to understand, like, he's got a great relationship in China. Many of the highest ranking officials in China, they love Elon Musk. They love Tesla. They love what he's doing, in pushing the future forward. And a lot of the Chinese competition that Tesla has over there, a lot of them have gotten huge amounts of their inspiration from Elon Musk and obviously what Tesla's been able to create over there. So, he's got a very good relationship over there. So could they ever stab Tesla in the back somehow? It's always a potential, but given his relationships with high-ranking officials in China, I don't think it makes it super realistic. I don't think it makes it super realistic at all.